Speaking to the Managing Director of Stratosfear, Jamie Holroyd. We're in extraordinary times, and there's lots to talk about in the whole finance and business world.
Tom, it's great to speak with you again. I wish it was under better circumstances, but moments like this, it's a little bit, if I was into astrology, it's a little bit like an eclipse. Economists, strategic management, and financial consultants. This is a fascinating time, really interesting to see what's playing out at the moment, what some of those longer-term legacy issues have been that put us where we are, and then where we might be going. But the word of the week is definitely uncharted waters.
Yes, it is.
Unprecedented.
Yes. Let's start at the top, I suppose. The impact of a virtual close down of the economy and industry in Australia.
Yeah, look, this is really interesting, Tom. I think in Australia that we have avoided a recession for basically 30 years. Now, that has been, in my opinion, both a blessing and a curse. It's a blessing because we've had good economic times, but I think it's become a curse because any government of any persuasion doesn't want to have their hands on the till when we actually go into the next recession. So we do, some odd things to try and avoid it. And really all we're talking about sometimes is a recession. The technical definition is 2 quarters of negative growth, right? So what we're trying to do sometimes is just bring forward growth from another period and it'll just be flattened. So we're just moving things around. We're not really making things more efficient. And I think some of the initiatives that have been done over the last 10, 20 years have actually made the economy more inefficient and we've got lower growth as a result, but because of this obsession with avoiding 2 quarters of negative growth. Now, I know some economists think the government's a bit too hell-bent on achieving a surplus, but I think avoiding a recession's been a bigger curse, to be honest. So,
just touch on that just for a moment. The fixation that governments have had with a surplus. Why? You hear from much smarter people than me about good debt and bad debt. Surely a government could have debt that was actually worthwhile.
Look, the answer to that is yes, and I'm probably a bit more in the conservative camp. So I think we should get back to surplus. I think that when you run a deficit, really what you're doing is you're living beyond your means, you're spending more than you're earning, and the theory is, well, we'll catch up at some point. But the trouble is what are you going to be elected Prime Minister saying, I'll put my hand up, we'll catch up now, right? That never happens, right? So what tends to happen is you kick the can down the road, and normally governments run up debt because they spend it on inefficient things. So if you have an overinvestment in unproductive assets, you typically lower the growth rate of the economy, not raise it. So if you think back years ago, and I think during the recession, Paul Keating wanted a standard gauge national railway. That made sense, right? It's something that everyone can agree on. It's an inefficiency. You solve that. That makes it a good idea. Building school halls, not such a good idea, right?
Yeah,
so,
for sure. The situation we face now, obviously the stimulus package phase 1 and 2 have been announced by the government. What's your take on those?
Look, it's interesting. I'm always a cynic of government, Tom, you know that, right? So I think it was Milton Friedman who said if you let the federal government run the Sahara Desert within 5 years, you'd have a shortage of sand, right? So I'm very much in that camp. But look, credit where credit's due. There's 2 initiatives I really, really like. The first one, I think, is the bank's commitment to deferring mortgage repayments. So if I'm in danger of losing my job, my major concern is, can I meet my mortgage payments? If you effectively take that off the table for people, then suddenly you feel a lot more comfortable and a lot more relaxed, and it will put some money in people's pockets. If you think of it, I'm always looking at what are the structural solutions to what we're trying to do here. Now, structurally, I say, the bank has a 30-year relationship with the customer in terms of their home loan typically, right? So most people have a term now these days of 30-odd years. We're asking for a suspension of payment for 6 months. So my understanding of the way it works is that the interest component will be capitalised.
Yes.
You have the same term, but effectively really what you're doing is lending it for another 6 months. Just don't pay at the moment.
Yeah.
The bank has security. Its position's fairly comfortable. We're not racking up government debt. Longer term, the bank will make a little bit more money out of it, especially when you think of the size of their portfolio. The householder's better off. So I give that a big tick, right? A very big tick. I think it's a really, really good idea. I wish we had done something like that during the GFC. I think it was a great idea. The next one, I think, is the capacity to withdraw up to $10,000 out of your superannuation. So if you're a couple, you can probably both do that. There's $20,000 this quarter, $20,000 next quarter. It's that person's money. It's coming out tax-free. That's probably another sensible idea. If I've got, 10, 20, 40, 80 grand, and I don't have to make my mortgage payments. I'm probably feeling a lot more comfortable around the world, my view of the world. So financially, I think they're two really, really clever initiatives. So I loathe some of the initiatives that come out where it's throw cash, incentives to things. Now, we know from our own background that any tax-driven schemes, investment schemes, they tend not to work, right? Most people lose money on those sort of things. So structurally, it's just all back to front. What it really means is that debt is going to be racked up. And typically, just as in a business, what you really want to do in business, you talk about good debt and bad debt. If you're buying a house, you may pay the debt off over a long period of time, 30 years. If you're buying a car, you pay it off over maybe 5 years. If you're buying it for some other purpose, you pay it off for a shorter term. So you've got to get the term and the structure of the finance correct. The problem with the government sense is borrow the money, it's kind of interest only, right? So now the other really strange phenomenon that we've had is we go into this synchronized downturn with a whole bunch of structural problems. So this is something that a number of people would have heard me talk about ad nauseum before, but we've moved to a position where the average mortgage to wage level is around 6 times, right? So if you go back historically, it was around 3 times. So it's something out of kilter here. So that's why house prices seem very expensive. It's part of the reason too why interest rates have been so low, because you can't really put them up because it will actually nudge a whole bunch of people into default. So as we go into this process, we have to somehow get that back under control. Now, you throw in the Banking Royal Commission, right? Now, the Banking Royal Commission found some issues, what I'd call of administration. I think, some failings of the regulators. Maybe the Royal Commission should have been into the regulators, but we'll talk about that separately. But I think there was the Commissioner almost fell off his chair when he realised the percentage of interest-only lending that was going on. So we've had an edict that it has to go back to a maximum of a bank portfolio of 30%, which meant that a whole bunch of amortisation was forced upon people who were not structured for it. So part of the reason we've had a little bit of a depressed property market is because all these people had to find a substantial amount of money to meet their payments. Those people putting a house into an already depressed market and driven it down further, right? So you go into this downturn. Now, you and I were pondering only 2 months ago whether we're headed for a recession before all this happened, right?
Yeah.
So, because it did feel that way, certainly. And been a series of retail failures, particularly big chain retailers. Again, there's a bunch of reasons for that. Like most things, when they fail, they tend to fail because all the issues start to bank up, and it comes to the point where you just can't push through it. So online competition, payroll tax, penalty rates, and it all gets beyond you. If you look also to the trend in car sales, motorcycle sales, it's been a downward trend over the last several years, and there's a whole bunch of theories around why that's the case as well. So the government has got some tax initiatives to get people out there and spending and get businesses investing.
So now we throw the coronavirus into the equation. Businesses that were already under stress, can they come out of this?
Well, this is where it gets really interesting, as some of the listeners will know, that we have a segment where we do distress turnarounds, and some of these initiatives will actually put those companies in a better position, right? So it's almost a blessing for them, this kind of downturn, because they're going to get help that they wouldn't have got otherwise. I think as I said, I think the economy's been weak for a period of time because we've lacked the courage to have reform. So my big hope out of this process is that we will reinvigorate the case for economic reform, the elimination of payroll tax, which is only really going to come from the broadening of the base of the GST. Now, we have to have a sensible discussion around that as a nation. So,
funding for business. Obviously, there's initiatives in the current circumstances where the banks have to come to the party, and the dual guarantee and all those sorts of things for business. Is that going to be enough? And where do the banks draw the line on who to fund? I mean, if it's a distressed business and it was distressed before this, and now they're closed for a couple of months and they've got no income whatsoever, what happens there?
Well, look, I might just go back and answer your previous question a little bit more completely, right? Now, I think about this is, if we look at the GFC, which was really a North American, European housing crisis, right? Yep. That's where the problem originated. The consequence of that then flowed into some of the financial organisations, which then caused a sort of crisis of confidence, which meant their credit dried up around the world, right? So the impact on Australia was secondary. The other thing that's really key is China wasn't really affected by that much. Now, China's our largest trading partner, which is now the epicenter of where this whole crisis has originated from. Now, I've been thinking myself, and I've been talking with a lot of policymakers, a lot of senior bankers, been talking to a few economists and people at universities as well, just everyone trying to get a picture on where are we at, what's going on. Now, this is my read on it, is the GFC in Australia really was the backwash of an issue that was somewhere else. So in terms of our ability to get through it, wasn't that serious. We it might have felt serious for the people who were more affected, but we had a strong surplus, we had no debt, we had interest rate capacity, monetary capacity, we could lower interest rates. So we go into what is a ripple, and we have the firepower to get it solved. So we get through that. Now, you could argue that we went completely over the top, and that's my argument, and that's a whole segment of its own. So it's quite a mild downturn. I then go back to, well, when was a fairly significant downturn? Now, I was kind of in the epicenter of the recession of 1991. I come from Geelong, worked in Melbourne. You might remember the Pyramid Building Society and Capital Building Society, the State Bank of Victoria, all falling over. So I look at it this way: as coming from Geelong, is the Ford Motor Company, one of the larger employers in town, and maybe they're going to trim their workforce by 5 or 10%, right? So maybe a few thousand people are going to lose their job, but they're going to lose their job with a fairly significant redundancy. So here's a check, right? So yeah, it's pretty bad. Now, maybe I live down the road from you and you've just lost your job, and I was going to go out for dinner tonight, but I might not go out for dinner, right? So, or I was going to buy a new car, but I might wait, just see how this pans out. So we're talking about a downturn that's kind of more modest. What we're talking about here is a complete stop overnight of whole industry sectors,
turn
right?
Turn the tap off, yep.
I can't think of a time in history where that may have ever happened, right? So particularly on a synchronised level. So even if you go back to, the Spanish flu, almost 100 years ago, it worked its way across the country in waves, right? So it might be, well, this part of the economy's closed down this month, and it might be 2 or 3 months before that news got somewhere else and they took the same effect. So clearly we're far more globalised. These things move a lot more quickly. So we are, I hate to say it, Tom, and I hate using catch cries, but I think this is unprecedented. So I think you'd have to suggest that if the economy was weak already, we're in for a fairly savage recession. And I would argue the risk of a depression is real.
So with that, I think everyone it's starting to sink in just how big this is. But of course, none of us have lived through a depression. We've had limited exposure to recessions. What does it mean both for a householder and for a business?
Well, look, this is interesting, Tom, and I'm not sure I have the answer. And I like to think normally I've at least I've got a suggested answer. Maybe it mightn't be the right one, but I think I'm trying to think through this myself. Is that that the household? If I'm a householder, what I'm going to do is everything that Keynes doesn't want us to do. Is I'm not going to stimulate the economy. I don't know how long this is going to go. I don't know the impact. If I can suspend my mortgage payments, I'm going to, whether I need to or not. If I can get 10 grand out of my super, I'm going to, whether I need to or not, because I just need to have that cash reserve and that cash buffer, right? So that suggests that that's going to then lead to contracting. So that's going to be a challenge. And then you asked me I'm about one question behind, Tom. You have to forgive me. You want to catch up. But then you asked about the bank. So what's happening at the moment? Now, we've had a really interesting time since the Royal Commission. So the Royal Commission, in my perspective, was more a political response. So there was no... If you have a Royal Commission into bushfires, it's because we had a bushfire, right? If you have a Royal Commission into child sex abuse, it's because, well, there's enough evidence that there's lots of child sex abuse going on, it's systemic, and we need to solve it. We had a Royal Commission into the banks because there was an election coming up, right? So it was very political. You had the government that didn't want to have it. And then, so what the consequence of it has been... If you think about it, this is my perspective, I have a broader perspective on this than most people, that some dead people got charged fees, right? So if you look at the number of transactions that a bank would do, it'd be in the thousands, might even be in the millions in some cases, that there's going to be some level of human error, system failure, and I always work on a number that system error, human failure, it's probably around 1 to 3%, right? If you've got something larger than that, it's a problem, but no system's perfect. So... Well, who's the executor of the will if the fees are being charged, right? So no one's looking at it, right? So it's not a big issue, but it sounds terrible, right? It sounds absolutely terrible. And they're the kind of issues that came up out of the Royal Commission, right? Yeah, there's been some other nasty things, but nothing nothing that would suggest a failure of the banking system in its own right. So now what you've got is you've got bankers who are terrified to do anything, right? So as someone said to me, it's being checked, double checked and triple checked, right? And so as you go through that process and it takes time, well, something might change. So you get this kind of gumming up the works where things take a long time. In response to that, what you've seen is the banks kind of withdraw a little bit from that, particularly the smaller space, and it's been filled. It's been filled by invoice finance providers, boutique financiers. So, and that's worked, and it's worked well. Those, fintechs, as I'd like to call them, they've filled that space reasonably well. They're fast, they're quick, but they're not banks, right? So they aren't banks.
Do they have a place, just to digress, just on the fintechs, do they have a place going forward from where we are now, given the changed financial circumstances we're going to be in?
The answer to that is yes, no, and maybe, right? So now my position would be I watch what goes on, right? And they're doing a lot of this through algorithms of bank statements. So some of that will be good and some of that won't, right? So one of the things that sounds easy to do is lend money. The hardest thing is when you don't get it back, then what's your response? So typically when you're a new lender, you think this is really easy because all I've got to do is be a bit more liberal than everyone else, right? So if you want to lend commercial property at 65%, I'll just make mine 70%. So then what happens is I end up with all the commercial property. Then if there's a downturn in commercial property, I get smashed, right? Yep. So which is typically the way the market works. I think will there be a clean out of some of the fintechs? You'd have to expect that would be the case.
Yeah.
Now, if you go back to the GFC, during the GFC, there's a few people a little bit wiser than me, not that much, a little bit. They said, well, you should be able to see a credit crunch coming because if you keep an eye on the credit spreads of the second-tier providers, is that their capital will get more expensive, right? And that's happening right now, right? So you've got the Reserve Bank cutting interest rates, and I'm getting emails from financiers saying our interest rates are going up, right? So that almost puts a shiver through me. So I expect some clean out in that kind of area. Now, I was speaking to an insolvency practitioner today, and we were kind of disaster planning everything. And his view was that if it's hard to get credit from the bank and we don't have these other providers, then what you're probably going to find... Now, at the same time, the government has changed the laws around your ability to petition a creditor, right? So at the moment, most people know or not, if you don't pay one of your bills, the creditor can petition to have you wound up. So it is kind of your David and Goliath battle, but you've got this weapon that you can go out and go, well, I might wind you up. The larger company says, gosh, this is a pain, or I can't have this, and they finally pay you, and it's resolved. Now, the government in its wisdom has said, we're going to change it from 21 days to 6 months. So now, you don't have people winding you up, but you also have nothing to force people to pay you, right? So this is going to become problematic. Now, what is the unintended consequence of that? We believe the unintended consequence of that is expect terms to dry up, and you're going to probably be on COD with a whole bunch of people. So,
which COD with no funding and no working capital means no trade.
Yep. So you will have a credit crunch. And the credit crunch will come from businesses' credit, not from bank credit, right? So,
yeah, right.
Yeah. So it's going to be really interesting how it washes out. So
the overall system, we've seen Centrelink crash and burn significantly with the unexpected workload, and in fairness to them, no one could have seen this coming. So to be geared for it to this level, you simply wouldn't be. To all of a sudden find an extra 2 million people from nowhere going, want the system, and we don't want you to queue up, and we don't want you to come into the office, and we haven't got enough phone lines.
Well, look, we talk about this a lot, right? So my colleague, Dr. Paul Anderson, he kind of building on the work of Dr. Ishak Adiz's, that you talk about normal problems and abnormal problems. We also talk a lot about arrogance, right? So my definition of arrogance is something that you're going to do for the first time, or you're going to be new at, and you think you're going to outperform somewhere else. You think because you open a restaurant, it's going to do well. Even though the guy down the road has been doing it for 20 years, he's doing okay, right? So now, we also talk about the normal and abnormal problems. Now, we went through the GFC where we had this same issue, right? We're going to pour thousands of people, millions of people into a system that we're going to design tomorrow, right? It's never going to work. So the problems are expected. I was a little bit shocked that the government was shocked that so many people queued up at Centrelink, right? So that to me was totally predictable, right? So you can't roll out new initiatives. And if you think about, Tom, is you think about the resources of the major banks, right? They make billions of dollars. They got tens of thousands of people. So on average, a bank probably has 40, 50,000 staff, right?
Yep.
I've spoken to most of them in the last couple of days talking about the government's initiative about this 50%, $250,000 loan, cash guaranteed by the government. No one knows how it's going to work, all right? So no one can work out, well, where does the line sit, how we're going to do it, how much, who to, in what circumstance, and everyone's busy trying to work it out at the moment, so you just add to confusion. The other thing that's really fascinating at the moment, all this is kind of unfolding as we're talking, right? So we're talking, first we've got coronavirus, then we've got economic shutdown, then we're talking about systemic failure of large institutions, right? Now, the failure of Centrelink is systemic, right? Now, will it be sorted out in a few days? Probably not. A few weeks, maybe. A few months, possibly, right? So you're going to get a lot of angry people, right?
Yep.
Now, if you think back to the 91 recession, I think we had 1 million people unemployed, right? Expect it to be that kind of number, right? So this demand on the system is going to be large and potentially growing. So that's our first issue.
I guess the first difference, though, is then you didn't have 1 million people like in the space of 24 hours.
Exactly right.
Which is the fundamental difference now.
And left with zero income overnight, right? So, and I know that people been giving Qantas pats on the back, but I don't, right? And maybe I'm a little bit ill-informed, Tom, but what I saw, and maybe someone needs to correct me, so please don't kill me for this, but they're going to park their staff. They're not going to make them redundant. They're not going to give them redundancy. They're going to say, well, put them over here and can someone else look after them? And then when I need them, I'll get them back, right? Now, if you're an employer, I think you have more obligation than that. So,
well, equally, Virgin's announcement today is that they've put 8,000 off of their 10,000 staff with an expectation that at least 1,000 of those will never be re-employed.
Yeah. And we're talking about systemic failure, right? So if you let that many people go, well, you would have to expect even the ones you think are going to go back might not, right?
Yeah.
So, now, like anyone who has a change of habit, if you suddenly... So, for example, let's say that I watch my favourite TV show and for whatever reason it's not on tonight, and then I watch something else. Well, there's a fair chance I might not go back to that other TV show, right? So, and that's the same with business, with the way people spend. So, I think spending habits, the economy will be different out the other side. How different, I'm not sure, but I think it will be substantially different.
The retail sector is probably the one. I mean, they've been copying it for the last few years anyway, with the presence of online. Now they've got this double whammy. We've got large groups closing down, mass sackings. We've seen, as you said, some really high-profile big organisations fail in the last 2 years, really.
Yeah.
How do they bounce back out of this?
I don't think they do. Now, that sounds fairly pessimistic, right? You're saying, well, where are the two sectors that were weakest going into this? Probably retail, restaurants. So there's been a number of high-profile retail chains fall over. And these are not new chains. These are long-term household names. Now, maybe the world's changed. Maybe the model's dated. A bit like the video store. Well, it's gone. Maybe it's not coming back, right? Now, as to that, I'm not really sure. But there's also been a series of high-profile failures, particularly in that kind of celebrity restaurateur-type space as well, right? So you say, well, again, these two sectors were weak already. Now they're being smashed. And when I say smashed, you can't get more smashed from going from being in business to closed down by the government, right? So, I mean, effectively, I think about this is that it's almost like martial law, right? If this was happening in East Germany 30 years ago, we'd be outraged, right? But I've been quite surprised that more people haven't pushed back and say, well, government, are you allowed to do this? Are you allowed to do all these things that you're doing at the moment? Now, it doesn't mean...
It's almost the reverse. In fact, most of the feedback and, social media is not exactly the best barometer of some of these things, because it's often a vocal minority. But in actual fact, the non-closure of schools and the delays in closing things down has actually, I've seen more of a backlash about that than the fact that they are closing things.
Yeah.
It's interesting.
It is fascinating, right? And so the problem with social media is it does magnify issues, right?
Yeah.
So you only take 2 or 3% people to be outraged, and you would think it's everybody. Now, I think that election results in recent years have shown that there is a disconnect between the noise we hear and how people act and think. So, but I'll give an example, Tom, and it was just, this is all unfolding just before we got here, that I saw online there was a nurse, I assume that she was a nurse, and she's kind of outraged that the government had said that hairdressers can stay open, and what are they people thinking, and they need to think more than about their hair and their appearance. But if you take the counter view, which is very difficult on social media, much easier here in front of this camera here. But the counter view is, well, that's great, right? A nurse, how much are you on? How much are you paid? You getting paid this week? You getting paid next month? You getting paid next year? Hairdressers on zero. Livelihood on the line, right? So it's not just about the cosmetics or, and it's easy to get outraged.
Yeah.
But if you want to be outraged, well, send your paycheck to us. So then let's see how outraged you are, right?
Yeah.
So there is always two schools of view. And the one thing I hope that we get out of this as well is that I certainly know when it comes to global warming, when it comes to the coronavirus, is plenty of people have different views, but they're too scared to mention them. Right? So I might get plenty of emails to say, "Oh, Jamie, I thought this." Right? So one of my good colleagues the other day was saying, "Well, are we going too hard on this?" Right? So currently, and I'm no medical professional, so I'm only proposing the counter view. We've had, I believe, 7 people die of coronavirus.
I think it's up to 12.
Okay, so 12
as of now.
Now, one's too many. Don't get me wrong, one's too many, right? If 12 people died of the normal flu, would we collapse the whole economy for it? The answer to that's probably no, right? So, are we going too hard too fast? Not sure. Are we? And these are questions that we need to ask. Doesn't mean that we don't end up in the same position, but we need to ask the question. So, how many people caught the coronavirus at the gym? Is it hundreds? Is it zero? Right? So these are discussions that we're not having. Now, you say that the truth is the first casualty of war. Is I think full information or disclosure is probably the first casualty of a crisis. So in a crisis, you probably withhold a bit of information because you want a certain outcome, right? So you don't say, well, actually, no one ever caught coronavirus at the gym as far as we know. Now, they might have, and I'm not proposing that you should ignore all the social distancing and those sort of issues, but I'm just saying we need to have a more holistic conversation around those issues. So the reason I'm saying that is for the sake of a day, a week, a month, the consequence of this will last, I think, 100 years. Right? Now, people think I'm exaggerating. Right? That we come out of the GFC. The GFC was 12 years ago. We collectively starting to come to the opinion that maybe we overacted. Right? We have $400,000 million in debt. I challenge everyone to ask, what do we spend that on? Right? No one can ever answer the question. Right? Mm-hmm. So we don't know what we spent all that money on. We don't yet have a surplus 12 years after, and it's been promised multiple times by multiple governments, and I think the government of today's big achievement was going to be, we're going to have a surplus. Now, our team doesn't have the resources to do all the complex modelling, but I understand that the deficit might be headed for $160 billion. Right? Now, that is about 4 or 5 times what it was in the GFC. That means our debt will probably double. And I think we'll push $1 trillion. This will not be paid off in my lifetime, my kids' lifetime, and my grandkids' lifetime. And probably not their kids' lifetime, right? To something that's happening right now, right? So that's we need to keep that longer-term perspective in play. We can't just have a singular sort of conversation. Now, if I'm charged with a medical response, I don't care about all that, right? I just don't care. So that's my brief, and that's what I've got to do. So I understand that different people have different focus and different response. So
businesses generally, at all levels and all sizes and all industries, are going through extraordinary times about how to pivot, how to exist, how to keep people on, how to just live somehow. In terms of what you do, what's your advice to a business that is currently sitting there going, bloody hell, what am I going to do next week?
Well, look, it depends on the circumstance of the business. Now, because we've been in a weak economy for a period of time, we've spent the last 4 or 5 years assisting SME businesses with mergers and acquisitions. Because typically what we've had weak businesses. I've run my business for 30 years. It's not generating the great return, so it's hard to sell. And my probably best bet is if I join forces with a competitor or someone who's complementary, that we can both extract more value out of that. And we've had some fairly spectacular results out of that. I'm not sure there's too many people who focus on that SME space the way we actually do, right? So that's been our response the last couple of years. I think things are unfolding so quickly at the moment, Tom. I'm not sure that we yet have a prescription around what the issue is going to be. So what would I be doing at the moment? Bit like I mentioned before, maximising liquidity, both in a personal perspective, but also in a company perspective. I'm going to cop bad debts. I know that, right? So who are they going to be? How do I solve for that right now? What do I do about my people? That's a big issue. Now, I keep coming back to the same issue, Tom, and I sound like a broken record, but it just brings me back to payroll tax and industrial relations reform. That's what you'd want coming out the other end. But are we going to get that quickly? Well, maybe we might. Maybe we might have evolved to the point where we realise that maybe the position we had was unsustainable.
So to contact you, because obviously there's lots of businesses at the moment looking for assistance and guidance, because there'd be a lot of people in business, even really experienced, that would be scratching their head at the moment about what to do.
Well, look, they can certainly contact us via the Stratosfear website. So that's Stratosfear, Stratosfear. So maximise that fear, because we were born in the GFC, which is kind of why we had that name. But so look, uncertain times, Tom. The one thing I just wanted to touch on briefly too, which we sort of danced around a little bit before, but is some of the systemic failure going on. So, and that particularly relates to the offshoring of certain call centres, processing centres. So there's been a big trend towards India, and more recently in countries like the Philippines. Now, with those countries in lockdown, I can tell you that a number of our large institutions have no access to those people, right? So you've got to start to onshore. So you would expect banks, insurance companies, companies like Telstra.
Saw a post this morning that Telstra are looking for 1,000 people for their call centre.
Well, they might politely have said, well, our offshore call centre's closed right now. And so what that means is if you're going to need a response out of that, you've got to expect it's going to take a long time, right? It's going to expect it to be inefficient. Very, very challenging issue to upscale, a couple of thousand people onshore quickly. That's going to be a challenge. So one of the things when I talked to my old mentor, Dr. Jerry Corfisanis, and it was quite interesting because his first words were, it's going to be interesting to see how the systems hold up. Everyone working from home, how's the system going to call up? He was calling me from Port Fairy in Victoria and the phone dropped out, right? So, dropped out about 3 times. So he was, as always, Dr. Jerry, completely on the money. So.
Yeah. It's, equally, I suppose the shortcomings of things like the NBN are coming home to roost a little bit, aren't they?
Well, look, I think that, system-wise, we've probably made things a little bit too lean. So, and I think the world will pivot back. I think socially people will be different. Quite interesting. I just had a nice conversation with a gentleman at the traffic lights, right? He was tooting and honking me and pulled up and he said, you got your indicator on. And I sort of said to him, look, I've got 1,000 things on my mind. But he was quite sociable. I reckon he must have been locked up at home for a week, right? He was quite keen to have a conversation at the traffic lights. So. Yeah, no,
we're in a very different world. Let's keep on having this conversation about, what's happening in the world and how people can get assistance, because I think one of the things that comes out of this is that whilst we've seen some really, really ugly things and the irrational bombardment of supermarkets for toilet paper is probably a good example. We're also seeing a lot of people step up to the plate and go, okay, look, my situation's bad, but other people have got it worse. What can I do to help?
Well, look, one thing I really want to do is I want to correct some of this mythology, right? So we go to the supermarket and there's no toilet paper, and someone must be hoarding a warehouse full of toilet paper. Now, it's as simple as this, Tom. Is the supermarket has a certain level of toilet paper, people go along. Now, in supermarkets, in most retail trade's pretty predictable. It moves in a fairly narrow band, right? So we're selling, 100 units of toilet paper every week.
Yeah.
I start to hear a hint that, there might be a shortage of toilet paper. So instead of buying 1 packet, I might buy 2. So now there's 200 packets that need to be, so it sells out straight away, right? Yeah. And so then I think, there's a bit of a crisis, right? So
you better buy another one.
No, even if I don't buy another one, if I'm going to go buy it on Saturday, maybe I might go down on Thursday night and buy it, right? And so what I've got then is I've got increased frequency as well. So what can look like a complete and utter chaos and people's terrible behaviour, and it's not necessarily the case. Now, can you find a couple of yobos biffing on at the shopping centre every week? I reckon you could, right?
Yeah, pretty much.
So, I think, again, some of these things are probably magnified. Now, I have heard this, and I will state this as a rumour, not a trumour, but someone who suggested to me that if you don't fill the whole aisle of toilet paper, you just fill a little bit of it and you maintain a sense of crisis, that maybe people might keep panic buying it, right? So...
I'm hoping that there's no validity in that story because, it's not what we need right now. I think some of the rational arguments about simply supply chains I mean, you've only got X amount of trucks. You can only, most supermarkets might get, 3 deliveries a week instead of every day. They don't get topped up every day for every product. It stands to reason that if you've got increased demand, and as you said, if all of a sudden it doubles, that on day 2, so delivery comes on Monday, on Tuesday you're going to be short of stock.
Yeah,
and Wednesday it tops up again, Thursday you're short of stock. I mean, there's nothing terribly surprising about that, but yeah, I mean, I suppose with social media and also elements of the media that have decided to highlight these things and do the shock treatment because that's how they get ratings or sell newspapers.
Yeah.
Obviously, those things are going to be focused on as opposed to good stories about someone helping someone.
Yeah. The truth's always somewhere in the middle. Right?
Yep.
So, and like a lot of these things, Tom, is that I think you mentioned before that, we couldn't have seen this coming. I think we live in a world that's so connected, right? So even though things seem more efficient, even though we have algorithms now that can tell us all sorts of things, and Woolworths know more about what I buy than I know, right? So I get these specials on my email. I think it scares me that they know I buy this brand of yogurt, right? Yeah. But the more connection points you have and the more complex things become, the more vulnerable the system actually becomes at the same time. So that sort of complexity is why we kind of end up in these kind of systemic sort of failures. So the other thing too is that I think someone mentioned to me the other day that a lot of those independent supermarkets are under real pressure. So this kind of crisis will actually save some of them. I think the other thing will be, I think long hair is going to be in. So I've got longer hair than normal. So that's going to be the Corona cut, I think I'm going to dub it already. So there'll be a few other trends. A lot more people having home delivery. So maybe people who never had home delivery before. Now, I'm not a fan of the home delivery thing because it's too expensive. Right? So the cost of delivery, labour is too expensive. Most of it's underpriced. So as a business model, it doesn't work. But socially, I think that's probably something that people are going to be more attuned to. So we're trying to think through what are the industries going to benefit and what are the ones that are going to suffer out of this. So Tom, just as a point of amusement, that I do have a rather large birthday coming up soon. I thought I might celebrate it, kicking some rocks around Egypt, but for the first time in 4,000 years, it's closed, right? So.
There's a new normal, and in the next few months, we're going to be going through some interesting times. There'll be plenty more to speak about. Jamie Holroyd, you can find him at Stratosfear, which is finished with an F-E-A-R, not the other way, and always good to speak. And make sure you contact him if you need some help.
All right, terrific. Thank you, Tom.